The Bay Area housing market and the national housing market, for that matter, are on absolute fire. That's not front page news. But the question that everyone asks themselves is, when will the carnage stop? How can people continue to afford such expensive homes? Will housing affordability ultimately lead to the demise of the Bay Area and the national housing market? Coming up on this week's Silicon Valley Snapshot. If you tuned into May's first episode of the Silicon Valley Snapshot, you'll know that every single county is outperforming even the most bullish economists' wildest imaginations when it comes to buyer demand. Inventory levels are actually a little bit higher than they were in a lot of counties in comparison to last year. So the inventory shortage that we've been talking about for so long is really no longer the case. Now, don't get me wrong, inventory is still super low, but in today's video, we really want to dissect housing affordability and the demand and how much longer the buyers in our marketplace, and not only in our marketplace, but nationwide, can continue to sustain their activity levels, because it seems, for all intents and purposes, that housing is more expensive than it's ever been before. Now, before we get into the data, if you are a home buyer in today's marketplace and you are looking for a comprehensive data set to assist you in your home buying decision making, you can text the word data plus the zip code, the area, or the neighborhood that you're looking in, and we'll send that data straight to your email inbox. And if you are a home seller in today's marketplace and you're looking for a comprehensive report to assist you in pricing your property, pricing strategy matters now more than ever. I cannot hammer this point and concept enough. So if you're interested in that report, you can text the word data plus your property address, and we'll get that data sent straight to your inbox. I have to say, I scoured the internet for the best real estate data information possible, and nothing quite seems to summarize things as nicely as Keeping Current Matters. This is not a paid sponsorship. I wish it was, but they really do a phenomenal job of summarizing everything that's happening in our marketplace today. And it's no front page news. Prices are insane right now. I mean, you look at March 2021 year over year house appreciation. Federal Housing Finance Agency, 13.9%, 13.2% as reported by the S&P Case-Shiller Index. CoreLogic, Home Price Insights, March 2021 year over year appreciation, 11.3%. So basically, we're in the double digits year over year. Houses have appreciated well over 10% nationwide. That's insane. And here in the Bay Area, we know pockets where we've seen 20 to 30 to 40% growth year over year in housing prices. And the thought in everyone's mind is, when will this carnage end? When will we see home prices start to settle? Or in some buyers' cases, they're the eternal optimist. When will the prices come down? We'll get into that in a second. As previously mentioned in the video, we talked about inventory levels and how inventory right now is actually higher than it was last year. Coincidentally, the rise is not as drastic as we would need it to be in order for us to see any sort of neutralization or stabilization really in the marketplace, because we have a lot of demand. Bill McBride with Calculated Risk says if inventory increases slowly, house prices will continue to rise rapidly. And if inventory increases sharply, house price growth will slow. So notice, if inventory increases slowly, which is exactly what's happening in Bay Area right now, house prices will continue to rise rapidly, which is exactly what's happening. And if inventory increases sharply, which has not happened yet in the Bay Area, house price growth will slow. This is exactly what I've been telling my clients, everyone that's been asking me, Danny, when is this correction going to occur? And I'm like, well, we'd need some sort of extraneous force to basically present or dump a ton of additional inventory into the marketplace. And a lot of people are talking about forbearance and how that's going to impact the marketplace. And we're going to get into all of that. Don't worry, we're going to cover everything, everyone. We're going to mitigate all of your concerns. Home pricing forecast for 2021, MBA, 10.3% increase year over year is the forecast. NAR predicts a 9.2 increase in housing prices. Fannie Mae 8.0, Zelman 7.0, Freddie Mac 6.6, Realtor.com 5.7, and CoreLogic 3.5%. So everyone's bullish. It's great news. No one is forecasting a negative 2021. And at this point, how could you? Because we've had such an incredible run up at the beginning of 2021 that even if we do see a stabilization, say in the latter half of this year, we're still going to be net positive. And I think that's really important to note is when you look at these numbers, some of them are a little bit lower than the year-over-year numbers that we're seeing. And so you'd have to imagine that there's going to be a slowdown at some point. And it's interesting because I think it ties in very nicely to what Bill McBride was saying, which is if inventory increases sharply, what happens if demand comes down just ever so slightly? Inventory continues to increase. Well, in the Bay Area, we have almost triple in some areas the demand. And if you watch last week's snapshot, you'll see exactly what I'm saying. We laid out all the numbers for you. Triple the amount of demand than we did last year in some areas. Think about that. We had 3 times as many pending homes. 3 times as many buyers saying, yes, I can afford a home. 3 times as many lenders saying, yes, that buyer can afford that home. When will the carnage stop? Well, the carnage really stops when homes start to become unaffordable to the median American, to the average American. And here in the Bay Area, when the median home price exceeds, the median home price exceeds the median income in terms of affordability. And when do we get there? Well, hold on, because we are going to introduce that in a second. National Association of Realtors says the housing affordability increases in March as incomes surge. We have this really cool housing affordability index as put together by the National Association of Realtors. And the way that they create this index or this metric, there's a lot of science, there's a lot of data behind it. I've researched it in the past. And if you watch previous Silicon Valley snapshots like last year, we really go in depth into the housing affordability index. But for now, you'll just have to trust me that these numbers make sense. The higher the index, the more affordable homes are to the average consumer. You'll notice from 1990 to 2008, we are nowhere near where we were post 2009. And all of a sudden, after 2009, we had a ton of distressed properties hit the market. And as the affordability index rises here, we see at the peak 2012, when we just had a slew of REOs, a slew of short sales. And now we're back, we started to come back down 2006, 17, 18. If you guys remember, 2018 was really a pinnacle year, especially here in the Bay Area. Massive appreciation in 2018. And then boom, we got hit hard like a Mack truck. Now today in 2021, housing affordability, 174. One of the highest numbers. In fact, if you look at this over the last 2 decades, we are we're at 4th most affordable year in the last decade for housing. Let that sink in for a second. How could this possibly be, Danny? How could this possibly be? Well, it's a good question. In 1985 to 2000, the percent of the median income needed to purchase the median priced home, 21.2%. In 2006, it rose all the way to 25.4%. That's how much of the median income are you deploying towards the home, right? Today, 14.4%. When I first read this statistic, I was shocked. I would never have guessed that housing right now is more affordable than almost ever, specifically when we talk about the median income. National Association of Realtors shows median income is growing rapidly. And could this just be a big bubble bath with a lot of inflation occurring and everything? Well, time will tell. But the facts are the facts. The facts say that the median income can afford way more house today than it could in 1985 and 2006. That's what I'm reading. Crazy. Contrary to popular belief, owning one's home is frequently more affordable than renting. Well, yes, if you can afford the down payment. It is cheaper to buy a home than it is to rent in 2/3 of American counties. So that's Mike Lofton. Homeownership is affordable. So that's Mike Lofton. Now, this is clearly a national headline. The facts are the facts. And if you've watched previous snapshots, we've talked about how housing affordability here and how job security here in Silicon Valley, I believe for the next several decades, is infinitely higher. Job security, median income, all of these things that we're talking about right now, things are even more secure. The income is even higher here than they are in almost any other part of the country. Why? Because we are the epicenter of tech. And as long as that continues to be the case, now we don't know what the future is going to bring. Like, what if Austin explodes and now that's the new Silicon Valley and now Silicon Valley is like the ugly stepchild? Well, that could happen. But like, is that going to happen in the next 5 to 10 to 15 years? I don't think so. And maybe other people have differing opinions. I'd love to hear your opinions. You can leave them down below. But I just don't see things changing anytime soon. Now, will we experience highs and lows in the meantime? Absolutely. There are too many variables at play for us to be foolish enough to think that we aren't going to see minor dips in housing over the next decade. Peaks and valleys. But that is a far cry from the absolute nightmare that we experienced in 08, 09. That we're not primed for that kind of housing crisis. That is not what's going to happen, and all of the data seems to indicate that. Now, could it happen? Absolutely, but I would say the probability is very, very low. I'm going to leave you all with this. We talked about affordability and how affordability is very doubtful to impact the demand, because right now in most areas housing is more affordable than it's ever been. And I know that's a crazy concept to take in and to digest, but the facts are the facts. That's the demand side of things. Now, let's flip over to forbearance, because I know that a lot of people right now are asking themselves, well, what about forbearance and how is that going to impact the inventory levels once all of this government aid just is whisked away? Interestingly enough, the original projection, this is by First American MBA, original projection for forbearance percentages was 30% of Americans were going to utilize a forbearance program. That ended up only being 8.47%. So we had far less Americans raise their hands and say, I need help. And today, only 4%, 4.19% of households are utilizing some sort of forbearance. If you watch previous snapshots, you'll know I went really, really in depth into forbearance. And so I'm not going to repeat myself, but essentially the vast majority of forbearances up until this point who have exited the program have had some sort of payment plan set up, or they paid all of their owed forbearance money already off. So the vast majority of forbearances, even still today, are probably going to end up, if they follow the same pattern, we're talking 70 to 80% of those forbearances, of those households still in forbearance rather, are going to get out and be fine. So there is going to be a subset, however, a subset of forbearances that do not make it. The argument is that while these homes have been in forbearance, the housing market has gone bananas. And so these individuals who are left with no other choice, and this is obviously very sad, and we're talking about families here, to sell their home and to get out of their home, they're not going to have to sell their home at a discount. They're going to be selling it at the highest peak of the market. They're going to be able to get out of there in all likelihood without having any sort of foreclosure or short sale. They will be forced to sell their home. They're probably going to end up walking away with some money. And of course, there will be some people who are underwater who have pulled out money from their home like a piggy bank. There's obviously going to be those. But that's a very small subset. The vast majority of forbearance, they're already paid in full or have set up a payment plan. Then there's a small subset of forbearances that are going to be in trouble. An even smaller subset of those that are in trouble are actually underwater or don't have enough equity to satisfy the payment off or to satisfy paying off the lender. So it just makes it makes too much sense that that inventory levels are going to be fine, at least from a forbearance standpoint. They're going to be fine. Now, could there be some other sort of extraneous factor that introduces a ton of inventory into the marketplace? Yes, and we've kind of gone into doomsday scenarios in the past, so I'm not going to beat that over the head. But the fact remains that according to many sources now, housing affordability is close to an all-time high. Even though we've had such an amazing run-up in prices. That's due to the median income rising pretty drastically here in the United States. That should be great news for everyone, right? Unless you're buying a home right now. And that should be a wake-up call to you that this market could last a lot longer than people are anticipating. And I'm not ruling that out of the equation. If you've watched previous videos, you'll know, like, I do believe that we're gonna have some sort of slowdown here in like the next 3 to 6 months or so. But when that day comes, how much more carnage will have occurred? How much more run-up will we have had between now and then? And in a lot of cases, it's like, hey, we don't know how much more we have left to go. So if you can afford to hold on to the home for the next like 5 years, I would say, like, based on everything that I'm seeing, I don't know if I'd wait any longer to make a buying decision on the pretense that we're gonna see some sort of correction. I just don't see it. And if you do, I would love to hear your comments. Like, please don't be shy. This is just one man's opinion, albeit an educated one, but just one man's opinion. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I will catch all of you in the next snapshot.